Hello viewers, in the previous lecture you have understood the concept of journal and the way journal entries are passed. Today we are going to understand the journal in greater details through its subdivision. Let us understand the subdivision of journal. You know that journalizing is the initial stage of accounting cycle followed by ledger posting. Entries passed in journal in sequential manner are to be posted in ledger. But before we understand ledger posting, let us understand that the journal discussed during the previous lectures is known as journal proper and is suitable for organizations with lesser number of transactions or for a smaller accounting period. When an organization has large number of transactions on regular basis, this journal becomes cumbersome and practically serves no purpose if all the transactions are recorded in journal proper. So, in such a situation, it becomes imperative to subdivide journal objectively. This subdivision of journal in various different purpose books is known as subsidiary books. Journal is broadly divided in two categories, that is special journals and journal proper. Special journals are meant for recording the transactions of specific nature and includes purchase book, sales book, purchase return book, sales return book, bills receivable book, bills payable book and cash book. Let us understand each one of them in proper details. Purchase book. As the name suggests, this specific book is meant for recording all credit purchase of goods and merchandise by business. What is important to note is that this book records only credit purchase of goods or merchandise by business. It implies two things. One, only purchase of goods or merchandise, that is the commodities related to basic business operations, are recorded in purchase book. And second, only that purchase of goods or merchandise is recorded in purchase book which is for credit. It means even cash purchase of goods or merchandise is not recorded in purchase book. Similarly, credit purchase of things other than goods like assets, say furniture, building, is also not recorded in purchase book. So, whenever a business purchases goods from suppliers for credit, it will be recorded in purchase book. This book is also termed as purchase day book, purchase journal, etc. Let us have a look into the format of a purchase book. As you can see, the structure of a purchase book comprises of 5 different columns. The first column, date column, shows the date on which transaction took place. As you know that journal is meant for recording the transactions instantaneously, transactions are normally recorded on the same day of happening. Particulars column, the second column, records the details of the transaction including name of the party from whom goods have been purchased for credit, specification of goods like quantity, size, details of list price and trade discount if any, etc. Invoice number column, this is third column. Invoice is popularly known as bill. The number of invoice issued by the supplier is written in this column. This invoice is also known as inward invoice as it represents inward movement, that is purchase of goods. The next column is LF column. Recall that LF stands for ledger folio. The transactions recorded in purchase book are posted in purchase account in ledger afterwards. The corresponding page number of ledger where purchase account appears is written in this column. Last column, the amount column, is a self-explanatory column and is meant for recording the amount of transactions. This column shows the amount of purchase. What is important to note is that this column exhibits the net value of the transaction after deducting trade discount if any. As against normal journal, this column is not divided in two sub columns. The reason for having one column amount is that this book records only credit purchase of goods, which shall always be debited. So, the basic nature of this book is debit. Now, let us understand recording transactions in purchase book with the help of an example. Let us say there is a firm Messrs. ABC Enterprises, a wholesale stationery trader, which entered into given purchase transactions during the first week of December 2030, and you have to record these transactions in the purchase book. First, we will read out the transactions and thereafter we will see how they appear on the purchase book of the enterprises. The transactions are like this. December 1, it purchased 100 boxes of pencils for rupees 20 each from Gopal Brothers. December 3, it purchased for cash notebooks worth rupees 10,000 from Kailash and Company on 10% trade discount. December 4, purchased 10 dozen bundles of A4 size computer stationery papers at the rate of rupees 2500 per dozen and 100 long copies at the rate of rupees 22 each from Kailash Traders with 5% trade discount on both the items. December 6, purchased furniture worth rupees 40,000 from Stellar Furniture, and last transaction, that is December 7, purchased miscellaneous stationery items worth rupees 6,000 from A company. Now, let us have a look into purchase book of the organization. The first transaction, that is December 1, is a credit purchase of pencils which is related to business of stationery. So, it should be recorded in purchase book. Let us have a look into the details. Date column is showing the respective date, that is December 1. In particulars column, you can observe name of the party, Messrs. Gopal Brother is given. Then details of the item, that is 100 box pencils at the rate of rupees 20 each is given, and total amount of 2000, that is 100 boxes multiplied by 20, that is shown in the amount column. Now, observe that invoice number and ledger folio, these are the items of practical usage. So, this is recorded when the information is available with you. In real life businesses, the businessmen will have invoice number with them and ledger folio also with them. So, they will be writing about this transaction. Second transaction, December 3, just note that this is not recorded in purchase book. We will come to this later on. Third transaction is for December 4. This is regarding purchase of stationery and long copies on credit. So, it is recorded. Let us observe it in purchase book. First, date is mentioned in the date column, that is December 4. Then in particulars column, you can observe name of the party, Messrs. Kailash Traders. Details of item, 10 dozen bundles of A4 size papers at the rate of 2500 each, 25,000 mentioned in the particulars column only. As there is trade discount available, so the trade discount of 5% of 25,000, that is 1,250 rupees is deducted, and net amount of 23,750 is shown in the same column. There is one more item purchased from the same trader, 100 long copies at the rate of 22 each, making 2,200 rupees gross amount, deducted for 5% trade discount, 110 deducted, and 2090 is the net amount. Adding these two values, that is 23,750 for stationery, that is A4 size papers, and 2090 for long copies, the total of 25,840 is shown in the amount column. Next, fourth transaction is December 6. Again observe that it is not recorded. We will come to this also. Last transaction, December 7, it shows purchase miscellaneous stationery items worth rupees 6,000 from A company. So, it is a credit transaction of stationery items only. So, we can see that in date column, date 7th of December is available, then name of the party A company along with details of stationery, that is miscellaneous stationery items is shown, and amount of rupees 6,000 is available in the amount column. This is how transactions are recorded in purchase book of a firm. We noted that we have not recorded transaction of 3rd December and transaction of 6th December in the purchase book of the firm. Now, recall that a purchase book records only credit transactions relating to purchase of goods and merchandise of the business. Transaction dated 3rd December, though being related to purchase of goods, that is stationery, is not recorded because it is a cash transaction. On the other hand, transaction dated 6th December is not recorded as it relates to purchase of furniture, that is asset. This is not goods for business, as we are talking about a stationery selling firm. Now, it might be clear to you that to be recorded in purchase book, a transaction shall not only be related to goods or merchandise in which a firm trade, but it shall be a credit transaction as well. Let us understand the second book, that is sales book. Now, by the nomenclature of this book, you might have understood that this specific book is meant for recording all credit sale of goods and merchandise by business. A business firm may sell goods for cash or for credit. As in case of purchase book, this book records only credit sale of goods or merchandise by the business, and cash sales made by business do not find a place in this book. Similarly, credit sale of things other than cash like assets is also not recorded in this book. Further, it is important to remember that goods sent on approval basis or under consignment process are also not recorded in sales book. So, whenever a business sells goods to customers for credit, it will be recorded in sales book. This book is also termed as sales day book, sales journal, etc. Let us have a look into the format of a sales book. As you can see, the format of a sales book is same as that of a purchase book, and the technical details of this book are also same as that of the purchase book, with the basic difference that while purchase book records credit purchase of goods or merchandise from suppliers, sales book records credit sale of goods or merchandise to the customers. Let us quickly understand the purpose of these columns. Date column shows the date on which sale transaction takes place. Particulars column records the details of the transaction, including name of the party to whom goods have been sold for credit, specification of goods like quantity, size, details of the price and trade discount if any, etc. Invoice number column, the number of invoice issued by business to customer is written in this column. This invoice is also known as outward invoice, as it represents the outward movement, that is sale of goods. Next column, the ledger folio column, records the corresponding page number of ledger where sales account appears. Last column, the amount column, shows the amount of sales. This column exhibits the net value of transaction after deducting trade discount, if any. The reason for having one amount column is that this account will record only credit sale of good, which shall always be credited. So, the basic nature of this book is credit. Now, let us understand recording the transactions in sales book of a firm with the help of an example. Let us say the same firm ABC Enterprises entered into following sales transactions during the first week of December 2013. Let us record this transaction in its sales book. First, we will read out the transactions and then we will see the sales book. In all, there are 4 transactions. December 1, the firm is selling 5 dozen bundles of computer stationery at the rate of 3000 to Pankaj traders and allowed a trade discount of 10%. December 2nd, the next transaction, it sold miscellaneous stationery items worth rupees 2500 to Aarti Stationers and gave a trade discount of 200 rupees. December 5, it sold for cash 10 pencil boxes at the rate of rupees 25 each to Umang Stationers. And last transaction, December 7, it sold 25 long copies at the rate of 25 each to A Limited. Now, let us have a look into the sales book of Messrs ABC Enterprises. The first transaction, selling bundles of computer stationery, seems to be a credit transaction, that is a credit transaction only. So, will be recorded in books of accounts. So, sales books first entry is for this transaction only. Date, December 1 is mentioned in the date column. You can see in the particulars column the name of the customer, that is Messrs Pankaj Trader is mentioned, followed by the details of the items sold to Pankaj Traders, that is 5 dozen bundles of A4 size papers at the rate of 3000 rupees each dozen, making a total value of 15,000, which is reduced for trade discount of 10%, that is 1500 rupees, and the net amount is shown in the amount column, that is 13,500. Second transaction is again a credit transaction, so should be recorded in books of accounts. So, you can see December 2, and in the particulars column you can see Aarti Stationers with the details of items, that is miscellaneous stationery items of 2500 reduced for trade discount of 200 rupees and net amount of 2300 recorded in the amount column. Now, talking about your next transaction, that is December 5th, just observe that this transaction is not recorded for the obvious reason that it is a cash transaction. So, shall not be recorded in sales book. Last transaction, December 7, again a credit transaction, so has been recorded in books. Date is mentioned in the date column, name of A Limited along with details of long copies and price is mentioned in particulars column, and total value, that is 25 long copies for 25 rupees each, 625 rupees is mentioned in the amount column of the sales book. So, you might have understood that transaction dated December 5 has not been recorded as it is a cash transaction. Now, let us talk about one more important book, that is purchase return book. When the firm purchases goods and these goods or a part thereof are returned back to suppliers for whatsoever reasons, the special journal which records these transactions of returning the goods purchased earlier is called purchase return book. Goods may be returned by buyer for various reasons. For example, goods may not be of required specifications as per sample, goods may be of inferior quality, goods might have damaged in transportation, etc. This book is also known as returns outward book, as it records the outward movement of goods returned by the firm back to the suppliers. This book is also termed as purchase return day book, purchase return journal, etc. Transactions in purchase return book is recorded on the basis of debit note. This note is prepared by buyer firm and contains the details of goods returned like quantity returned, specification, rate, etc. A debit note implies that the supplier's account has been debited for the value concerned. A purchase return book appears like this. Just see the format of this book. As you can see, the format of a purchase return book is same that of a purchase book, and the technical details of all the columns are also similar, with the basic difference that it records those transactions where goods earlier purchased by business are returned back to the supplier and the transaction is not for cash. Further, the basic voucher recording transaction in this case is debit note, whereas in case of purchase book transactions are recorded on the basis of invoice received from supplier. So, note that in case of a purchase return book, third column is debit note column as against invoice number column in case of purchase book. Now, let us understand recording transactions in purchase return book with the help of an example. We take the example of the same firm, that is Messrs ABC Enterprises. There are certain transactions entered into by the firm and these transactions are to be recorded in purchase return book of the firm. First we will read out the transactions and then we will record it in the purchase return book. There are 2 transactions in all. First transaction is December 2, where 10 boxes of pencils purchased from Gopal Brothers at the rate of 20 each were returned back due to specification differences. And then there is transaction of December 5, where the firm has returned back 2 dozen bundles of A4 size computer paper to Kailash traders as these were damaged in transit. These were purchased at the rate of 2500 per dozen with 5% trade discount. Let us have a look into the purchase return book of the firm. As you can see, both the transactions are relating to merchandise, both the transactions are credit transactions. So, both the transactions will find a place in purchase return book. See the entry, the first entry is for December 2, the first transaction, the party is Gopal Brothers and the details are 10 boxes of pencil at the rate of 20 each. So, total 200 rupees worth goods have been returned back to Gopal Brothers on December 2nd. On the same lines, see the second transaction is for December 5, that is shown in date column. The party is Kailash Brothers, the supplier, and the details of the items are there are 2 dozen bundles of A4 size papers at the rate of 2500 each dozen, making rupees 5000 in total, reduced for trade discount of 5%, 250 gone and net amount of 4750 shown in the amount column. So, this is how entries are marked in purchase return book. The next book is sales return book. On the lines of purchase return book, sales return book records the return of goods back to firm by its customer on credit basis. When a firm sells goods on credit to its customer and these goods or a part thereof are returned back by the customer to the selling firm for whatsoever reasons, the special journal which record these transactions of returning the goods sold earlier is called sales returns book. Goods may be returned by customers for various obvious reasons. For example, the customers may not be satisfied with the quality of the goods may not be as per order, goods might have damaged in transportation process and like this. This book is also known as returns inward book as it records the inward movement of goods returned back to the firm by its customers. This book is also termed as sales return day book, sales return journal, etc. Transactions in sales return book are recorded on the basis of credit note. This note is prepared by the selling firm in favor of customer and contains the details of goods like quantity returned, specifications, rate, etc. A credit note implies that customer's account has been credited for the value concerned. A sales return book appears like this. You can see the format of a sales return book. This format is more or less similar to the format of a purchase return book only. The difference that comes is the third column, that was debit note in case of purchase return book, is credit note in case of sales return book. So, debit note is replaced with credit note. So, you might have understood that the basic voucher for recording the transactions in this case is credit note issued to customer as against debit note issued to supplier in case of purchase return transactions. Now, let us understand recording transactions in sales return book with the help of an example. We are taking the same firm, ABC Enterprises. It is receiving some goods back from its customers. First we will have a look into the transactions and then we will see the book. First transaction is for December 3. Pankaj brother is the customer. Pankaj brother returned back 1 dozen bundles of computer stationery. These bundles were sold to them at the rate of rupees 3000 per dozen bundles and a trade discount of 10% was allowed. While second transaction is for Aarti Stationers, another customer who has returned back miscellaneous stationery items worth rupees 500 which were sold to them at 8% of trade discount. Let us see how these two transactions will appear in the sales written book of Messrs. ABC Enterprises. Both the transactions are relating to stationery, the basic commodity of ABC Enterprises, and both the transactions are credit also. So, they will find a place in sales written book. First entry December 3, customer Pankaj Traders, details of transaction. There are 1 dozen bundles of A4 size papers which were sold to them at the rate of 3000 each dozen. There was a trade discount of 300. So, we have reduced this 3000 for 10% of trade discount, that is 300, and net amount of 2700 is shown in the outer column. Likewise, the second transaction is Aarti Stationers and the details of the items are, it is miscellaneous stationery items of 500 rupees reduced for trade discount of 8%, that makes 40 rupees. So, 500 minus 40, 460 is shown in the outer column. This is how transactions are recorded in sales written book of any organization. By now, you might have understood and you might be clear about 4 important subsidiary books including purchase book, sales book, purchase written book and sales written book. In the following lectures, you will be getting an insight into remaining subsidiary books. Till then, have a great learning. Thank you.